Good morning, good evening, good afternoon to wherever you are in the world. Welcome back to the Monday edition. Usually we do these on Sundays, but for the long weekend, the market's still closed. So today's the Monday edition of the Sunday edition. So we just invest and chill on these days, and we don't really have anything lined up. Certainly, I don't have anything lined up, and we kind of just shoot the breeze, right? We just shoot the breeze, just talk about whatever's on our minds. And I do have a couple of things we will go over though, and we'll just see what happens. All right, we'll see what this turns into. I like the Sunday, or I guess Monday, whatever we're gonna call it, a Sunday invest and chill sessions, just because it's more ad lib, it's more chill. It's not going through a ton of news. The only thing we really have to talk about is the Iran-U.S. conflict negotiations right now, because the last I read was that the United States had striked a couple of boats that were laying mines and attacked a couple of launch sites. So I think that's probably why futures might start to come back down. But there was a whole lot of hoopla, a whole lot of talking over the weekend that we're going to have a deal. It's going to be great. They're going to include Iran in the Abraham Accords and a whole bunch of good stuff, right? It was a bunch of good stuff. The stock market absolutely was loving it. Hyper liquid, great website, definitely useful to check to see how the market is reacting to stuff as the market is closed, futures is closed. And, the market, the S&P 500, was loving it. I mean, people, started to pump. And, we're seeing oil come down as well. So we will, continue to see how this plays out. We still have about another day. A lot of things can change. The United States claimed it was in self-defense. So we will see. All right. So let me see. Let me get this fixed, and then we'll take a look at the chat. I got to pump this out real quick. Boom, boom. Yada, yada, yada. All right. So we got that posted to X. Ugh. All right. So let's see who we got in the chat for now. We have Sergio. I am here early, alive and breathing. Well, I hope you had a wonderful Memorial weekend. I hope all of you had a wonderful Memorial weekend, at least a somber one. If you guys know or are included in the, armed forces, or at least if you respect, kind of, again, what the day Memorial weekend is for, or what the day Memorial Day is for, right? So awesome to hear that you are alive and breathing. We also have Vlad up in the chat, just hopping to the first one. I'm not sure, but welcome anyways, Vlad. We have Grumpy Toad. Hello. Well, hello to you. And then we also have Sean up in the chat, just, letting us know he is here. Excellent. Awesome. Let's go ahead and get started, ladies and gentlemen. Let me go here, and well, not even there. Boom. There we go. All right. So I will put a link, because again, this is the invest and chill session for this week. Usually we do it on a Sunday, but since today is Monday, the holiday, so we'll do it today. And I will put a link to join in case you guys want to join and kind of shoot the breeze, talk about what you're investing in, or talk about things you're interested in, or maybe just bring up anything we're talking about on the stream. Let me also post it to our X viewers, because they don't shoot the breeze. They don't get as much love as I would love them to. All right, so I posted that link to the X stream as well, in case anyone from X wants to come on board. All right. Okay. Whew. Lot to go. Shoot the breeze. Shoot the breeze, Sean. All right. Awesome. Let's see. We also have Bon in the chat, Grumpy. Well, I'm assuming he means Grumpy Toad. And then we have Rodstamon. Always a pleasure to have you here. Coffee and listen, the coffee and chill session, as it were. Okay, cool. Let me get this back up. All right, so first thing we're going to take a look at here, ladies and gentlemen, is going to be the futures market, and we are looking a-okay for now. This was a little higher. I think Nasdaq was barely piercing about 1% higher, and then it's starting to come back down. But again, we still have a lot of time between now and tomorrow. Hopefully some good news comes out from this whole Iran US stuff, because again, we just struck them. They're not going to take that on the chin. Again, there was another report saying that Iran is saying that the entire deal is off the table. But again, that could also be fake or misinformation. Who knows at this point? Just so much crap is going on. We have oil, all right, energy below $100 for both WTI and for Brent. amazing. And we have coffee coming down in price as well. That's always good. All right. So obviously, market is loving the news, loving all the conversations that have been happening over the weekend. All right. Regardless of whether uranium is going to be part of the deal, not part of the deal, a ceasefire in place for 60 days could be extended. Hopefully more good things come out, because I think we're pretty much due at this point. A lot of countries are pretty much burning through their reserves for energy, at least outside of the United States, and that's not going to be good. So that is at least the update for the macro piece. Macro news, again, is really important. It's really driving this market right now. Let's take a look at the US 10-year, which is a huge deal. We see that South Korea's Kospi hits fresh record high, so their stock market is doing well on the hopes of a U.S.-Iran breakthrough. All right, so we're hovering at 4.5%, still very high. All right, still very elevated, and at least it's a little lower from where we were. We were hovering at about 4.66 in the not too distant past, and it looks like it is coming down very nicely. So hopefully we can keep this down and keep it going down, because this has a lot of implications, a lot of ramifications. Just for the general economy. Again, borrowing costs get more expensive. It's harder to finance a mortgage. That's going to impact real estate and so on and so forth, right? So getting this down is extremely important right now, especially for small businesses. Let's see what else we got here. Just a little bit of a little humor here. I've been seeing this meme all over the place, so I think it's pretty funny. Like, sir, the trader is long energy. Tweet the deal is imminent. Sir, Iran is denying it. Take crude down 6% anyways. Sir, that doesn't make any sense. It's not supposed to. That's exactly what this market feels like. There's someone in the background. If you guys don't know who this is or what the reference is from the movie The Truman Show. Basically, Truman was living this fake life. It was all for reality TV. And this was like the director, the guy behind it all. So Truman lived in like this dome, and it basically followed The Truman Show. But anyways, that's exactly what it feels like sometimes. Look at Sergio. I forgot to turn on the volume, so I missed the first 5 minutes. Don't worry, we didn't talk about anything important. Let's see. At least I wasn't muted this time, right? At least I wasn't muted. And we have Dividend Degenerates evening all. Looks like the gang's all here. Yes, sir. Yes, sir. And we have John Logan, coffee. Try THC. They do make a THC infused coffee. Sir, this is a public show, okay, with a lot of viewers. Not really a whole ton of viewers, but, with viewers nonetheless. I am going to avoid drinking the THC coffee during a live stream, because I don't think I would be good to anybody. But I do appreciate that recommendation. They do sell some of that around here where I'm at. They do sell some of it. Actually, you can't buy it in a store, but you can go to these little dispensaries all around. They even have like THC infused alcohol, like shots. And I mean, it could turn into a wild time. I don't partake. All right. I don't partake. I like to be a functioning adult, at least some of the time, most of the time, if anything. So that stuff would definitely take me out. Let's see what else we have. Oh my God. No, you would. No, Grumpy, don't. I would like a THC infused C4. Dude, C4 is wild, man, especially for a workout. Holy hell. That is crazy. No, no, absolutely not. If you're talking about C4 though, the pre-workout, I think you would be done. You would be out at the gym. You wouldn't even be lifting any weights. Let's see. We got trades, man. Let's go. Absolutely, man. I looked at my account and I just saw a big green candle. I'm like, hey, life is good right now. Let's see what we got. I keep telling you interest rates are not high. Look at the 80s if you want to see high interest rates. Well, I mean, they're high for now. I mean, they're high in recent time. Yes, I know in the 80s you had the hikes and they were up to what, 20%. Yes, that is true. But we're speaking in present day, and a lot of people, a lot of businesses, a lot of small businesses, a lot of people taking loans definitely think the interest rate is high. But maybe you're right. Maybe that's something there that, we came up in a very low interest rate environment. I mean, if you look at 2008, 2009 to pretty much, for that decade, 2008, 2009, all the way up to, 2021. I mean, it wasn't low interest. It was completely low interest. I mean, it was almost laughable. And we just grew up on that. especially investors in recent time. If you were investing, since I don't know, 2008, 2009, I certainly was. I started investing in about 2016, 2017. I didn't even know what an interest rate was. But, all that entire time, interest rates were kept pretty low. And we just came up on that, on cheap money, on easy, cheap money. And, then 2021 hit, 2020, COVID, and we printed, what was it, like $40 trillion? Jerome Powell and the U.S. government, not Jerome Powell, but, the Federal Reserve, U.S. government printed, what was it, like, I think I forget the statistic. It was like 70% of all U.S. dollars in circulation for the entire history of the USD in that period. And then now we're talking about high inflation, and we're worried about, interest rates being high, right? But I think that's because that's what we grew up on. But I mean, yeah, that is it is a valid point. It isn't as high, but I think we're just used to having low interest rates. Let's see. Techie Tard says, I would be limitless. Yeah, if you were on some C4 and freaking THC infused C4, yeah, I could see that. Let's see. Same interest for new houses I paid in 94. My God. Really? Damn. Yeah, yeah, I don't, like I said, I'm still fairly young by some of you guys out there, some of you old hats, walked around the block a couple of times. You've seen these interest rates far higher. And it's, I'm sure you guys look at this and just laugh at people like, back in my day, my interest rate was 20% on my mortgage. Yeah, I could totally see. That's when bonds and everything would have made sense. Nowadays, whatever. A lot of people just don't. I would think a lot of younger investors avoid bonds altogether. Let's see. Anyways, Sergio says, I have all my properties at around 2% interest rate, living the dream. I still remember when rates were around 10%. Holy hell. Yeah, I like my first interest rate, I think on my rental property was like 4.25%, I think. And that was right before COVID happened. And then COVID happened. And then, I got another property, and I think that was at like, I think 3.25%, maybe a little give or take. But yeah, that was wild. That was absolutely wild. It's still the same thing, bro. Like C4 energy drinks or even the C4 pre-workouts, all the same. You're gonna go crazy. Oh my God. My first house was 11.5 interest rate. Man, look at all you guys coming out of here saying that these interest rates, ain't shit. Back in my day, nah. I see, this is what I'm saying, like the diverse audience. So when you have people, young people, myself included, freaking out about a high interest rate, we looked at you guys and were like, interest rates aren't that high. This is a joke. What are you talking about? I'm enjoying myself. And absolutely, speaking of which, skeptic, enjoying yourself? And the answer is absolutely yes. Today is Tuesday where I'm at. I'm absolutely loving it. Absolutely loving it. The sun is out. Hey, a day above ground is a beautiful day, right? Let's see. Oh man, all right. Let's move on to some quick wins before I get back in the chat. I gotta give Sergio his flowers here. All right, give him his credit because 416. He said this out loud, and of course, me being me, I just completely ignored it because I was not focused at the time. But he called this out. He said, I'm expecting more momentum for sure with this ETF. I also bought last week the new ARM ETF. Okay. He posted this 416. All right. And I just remembered this. Over the weekend. And I was like, let me check in on this. And look at this thing. All right. 416. And look at this. 93% up. 93% up. All right. From April 16th, from when he called it out. All right. So Sergio, again, credit to you, man. You had an excellent call out. I'm not sure when you bought, if you bought like around here, because you said you bought it about a week before, but absolutely amazing. Up 90, 94 or 95%. Look at that. Look at that. Absolutely an amazing run up on ARM. So ARM, ARM W is the round hill weekly pay ETF. You're going to get a little bit of leverage. You get paid every other week, et cetera, blah, 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 or every week, I should say. But ARM, the stock itself, had an amazing run up as well. So, again, congratulations to you, Sergio. wherever you are in the chat. Let me find, I guess I could use this one. Yeah, this is Sergio, aka Cookie Mon. He is in the chat. I mean, he is in the Discord as well. And he posted this. I've been going through your quantum stuff that you've been sending me. It's just, man, I only got so much time in the day, and I'm trying to get through this. I also got stuff I got to go through with Skeptic, and of course, whenever Victor drops like 100 things, I got to go through them all, or at least try to go through them all. So I understand, kind of what's going on in different spaces. So appreciate all of you guys just dropping amazing nuggets. All right, amazing information. All right, let's see what else we got here. Let's see. All right. So anyways, do appreciate that. Sergio, aka Cookie Mon. Let's see. I tend to have C4 every morning, and lately I've been pairing it. Man, you were crazy. You're crazy. Candy Shop, RMW. Yeah, I bought it as soon as it went public. Damn. So you bought the ETF as soon as inception? Or a couple of months, maybe. Yeah, it's definitely a couple of months at least. Digivolve to Ultra Cookie Mon, says Rodstamon. Excellent, guys. Excellent. But yeah, gotta give you the credit, man. I looked at it too, man. I swear to God, I looked at it and I was like, let me buy a couple of shares. Cookie Mon wouldn't steer me wrong, and I just freaking didn't. I didn't. I am below my threshold on my dry powder, so now I need to really stop buying stuff because I'm waiting for this crash or whatever we're supposed to get eventually hit. I posted in the link in case anyone wants to come on to the show and we could talk about all things finance related, all things stocks related, or you could talk about whatever you want to talk about. I don't care. Today's the Sunday Invest and Chill session. All right, for earnings, all right, this is what we got coming up. All right, for the one I'm looking at, or the one I'm looking to listen into or get, we'll probably do a earnings recap on, is going to be Marvell here at the top. Probably Synopsys, and definitely I want to hear what Dell has to say because they've been in the news a lot. Probably the same thing with HP. But more so Dell. I'm more interested in Dell. So I'll be covering or doing recaps on these two companies at the minimum for this upcoming week. And it's going to be a short week. All right. We only have Tuesday, Wednesday, Thursday, and Friday. So there's only 4 trading days. So hopefully not a lot of crap happens. Hopefully we get some good news. Or again, just catch everybody up for the new people joining. All right. 30 viewers on X, 41 viewers on YouTube. Appreciate you guys joining for the Sunday or for the Monday, I guess, edition Invest and Chill. But again, over the weekend, we had Iran and United States having a little bit of a beef, a tit for tat. Not good. Okay. So Iran, of course, this could be misinformation or redirect or something. But apparently Iran said that they are getting out of any deals until the time they deem necessary to talk again. But we'll see. All right. Let's see what else we got here. Rastamon says Elmet should be a good one. Who is Elmet? Nutanix, Elmet. Is Elmet here on this? NetApp is a good one. NetApp is mostly Elmet. Okay, Elmet on Friday. Okay. All right, I see them. I don't know anything about them. I know NetApp and Nutanix. They're storage. NetApp is more storage based. They're similar to like a Cisco, not networking equipment, but they offer a hardware ecosystems around storage. So a lot of corporations, a lot of companies use NetApp. Nutanix is, if I remember correctly, it was like disaster. Like they have on-premise servers, but it can replicate to the cloud. I forget all about that. I haven't used Nutanix at all. I've used NetApp a little bit in the past, but Marvell is definitely going to be interesting. Let's see. We got James Maggs up in here. What's up, James? Welcome. Let's see. John Logan says, technically I have about 100K of dry powder. I've been doing cash cover puts on stocks like AMD and Intel with it though. That's awesome. Yeah, I'm sitting at around the same levels, a little under, because I've been buying a bunch of crap because I keep It's just, man, every other day it's like some new stock or something that's got an importance to this whole AI trade. All right, let's take a look at the next week. Of course, my highlights were removed. Page must have refreshed, but we do have some macro or economic news coming out this week. The ones I'm going to be interested in is the initial jobless claims, big deal there. And then we got PCE coming out, right? This is the PCE index and core PCE. This is the actual inflation number that the Federal Reserve is focused on. So this will be very important. As you guys can see, we're still above 3%, right? At least the median and the expected or the forecast. Not good. You guys can see PCE up 3.8%. At least that's what the forecast is, I think. Yeah, the median forecast. All right, up from 3.5%. So we'll see what it is when the numbers actually come out. That's gonna be interesting. But of course, we know that the last couple of readings have all been due to energy costs going up, right? All because of energy, oil, that type of stuff going up. So, it's no surprise. Of course, the government is saying that once this war concludes, the strait is open, then we should see oil prices come straight down, probably back into the 60, 75 range. And then, that will all obviously be good for people at the pump. But not only that, every other sector that relies on gas and fuel, right? You have trucks doing a lot of transportation. I mean, the trucking industry has been hit pretty hard because of diesel prices, not just in the United States. I mean, everywhere. But anyways, outside of that, the other number I'm going to be looking at is the ISM manufacturing. Anything above 50 is good, right? It's showing that there's an expansion happening in the United States, but that's actually next week. But that's another number I'll be looking at. So we'll cover these numbers as they get dropped next week. All right. So keep an ear out there, ladies and gentlemen. All right. So let's see. We got from Vivek Sen. This was posted in the Discord. I thought this was interesting. All right. This is BlackRock CEO talking at a conference about who, and we're going to get into this data center piece in just a second, but basically talking about who's going to be funding all of this CapEx spend, right? 700 billion in CapEx spend from the hyperscalers to fund or to build data centers, right? Who's going to actually be paying for all of this? This is a really interesting take coming from Larry Fink, CEO of BlackRock, the largest asset manager with trillions of dollars in assets under management. So let's listen in real quick. It's just a quick 1-minute clip.
Americans to think about growing with the United States. We will have far than enough money to invest in this.
You can hear that, right? Skeptic. Let me see. Can you guys hear this? I really hope so, because I know I included the sound this time. All right, you know what? I'm gonna play it. And then we'll just keep going.
But as the governor was talking about, the need for electrons is growing every day. Some of these, if we're going to be the leader in technology, which we are, if we are going to be the leader in AI, which we presently are, it's just going to require trillions of dollars of investments. And if we don't invest in it, China will be the global leader in this. And so to me, it's not whether, this is a must. And if you think about how that translates, it translates into a more dynamic economy. We need the United States economy to grow at over 2%. We need the US economy to grow at 3%, especially with the growing deficits the federal government has. And so much of this money, not just the project, is going to be coming from the private sector, from savings accounts, from pension accounts, from insurance companies, and on and on and on. The whole world is in need of improving the infrastructure.
Yeah. So basically saying, people are going to, like the building of data centers is going to be extremely important, obviously, for the United States to win this, kind of quasi Cold War AI race with with China, because that's pretty much what this is. So the United States is building out a massive amount of data centers, as we covered in a previous stream. And this is a data center map for the United States of all scheduled, completed, and current, data centers. So Goldman Sachs actually came out with a white paper not too long ago. May 20th is when this dropped. They're saying U.S. data center power demand projected to double by 2027. So I highlighted a couple of key points in here. So U.S. data center power demand is expected to climb from 31 gigawatts in 2025 to 41 gigawatts in 2026 and 66 gigawatts the year after. All right, wrote their Goldman Sachs commodities research team. This demand forecast is based on the estimate that U.S. data center capacity will increase roughly 95 gigawatts by the end of 2027, more than doubling the level at the end of 2025. And the capacity utilization rate assumption of 70%. So here's a chart of what they actually expect versus the raw schedule, because they do expect some data centers to get canceled. There's still a lot of talk out there, especially when it comes to politics. Certain cities, certain districts, certain states do not want data centers in their backyard. It's only going to increase the electricity bill for everyday Americans. That is a piece of why they don't want the data centers in their state. And there's lobbying groups also now sprouting up for the cancellation of data centers, right? But this is a national interest right now, is building out the data centers for artificial intelligence. You guys know this, right? You guys all know this, I'm sure. I wouldn't shut up about it. I don't shut up about this stuff. But another key point here is not all these ambitious construction schedules will translate into working facilities. Historically, only about 72% of data centers scheduled for activation within the following 4 quarters or a year actually went online on time. The further out a project scheduled for activation, the less likely it is to be completed as planned, according to Goldman Sachs research. Supply chain and labor shortages remain the most common causes of the delay. There are those words again, right? Supply chain and labor shortages, more so the supply chain shortages. We talked on this channel multiple times ad nauseum about bottlenecks, about scarcity, right? Investing in scarcity. This is a year to invest in scarcity. Artificial intelligence software is not scarce, right? That's why we're seeing the software names also sell off. So, there's bottlenecks for semiconductors, bottlenecks for memory. The biggest thing, and this is kind of something I'm keeping my eyes on like really closely, is what's going to happen with China's memory market. Because right now there's a kind of a, not a sanctions, but there is no Chinese memory in the United States markets at this moment. It's mostly South Korean and it's mostly Micron, right? These are the 3 big memory producers currently. And if China was to ever get into the open market, we would probably see the ETF DRAM get completely destroyed. We'd probably see Micron, SK Hynix, and Samsung also go down, right? There'd be a huge correction, a massive pullback if memory started to flood the markets from China. All right. So as long as that, is still the case, as long as, we're not buying anything from China, any memory from China, then we are okay. But that is the biggest risk at this moment for memory, for the memory trade. All right. So that DRAM ETF, as nice and as awesome as it is, and it's been climbing up into the right, the only thing I found that can derail that entire thesis is the Chinese market, the Chinese memory market. But anyways, the typical data center takes 18 to 24 months to build once permits are secured. After adjusting for these risks, forecasts approximately 60% of capacity scheduled for the next year will materialize on time, dropping to roughly 50% in the next 2 years, right? So you're going to see, again, this large, sharp incline of data centers being built, and then they're going to kind of level off and come down over the next preceding couple of years. So which U.S. markets have the biggest increase in power demand? Power, all right, power demand, okay, power companies, utility companies. We know XLE, the energy ETF, or the utilities infrastructure, companies and ETFs, they've been doing really well. Average annual data center additions in each of the mid-Atlantic, Texas, and mid-continent power markets are individually scheduled to exceed the entire nation's total additions in 2025. So where are they building all the data centers, right? You have Texas, Georgia, and Virginia, if I read that correctly. Texas, yeah, mid-continent, mid-Atlantic. So power reliability risks are elevated in the mid-Atlantic, mid-continent, and Northwest markets because their planned generation capacity additions are limited relative to the flood of incoming data center demand. The team's analysis shows these regions may ultimately have to turn some future data centers away. Texas and Georgia, by contrast, are expected to see only marginal tightening. Both regions have significant new power generation capacity in the pipeline, which should absorb the additional load. Meanwhile, markets like Tennessee, New England, and Florida are likely to see constrained data center additions since the market is already critically tight. All right, so the big takeaway, in my opinion, is power is obviously very important, right? Power, utility companies, we're seeing that with the mass rotation away from software, away from tech, into power. There's a couple of ETFs out there. The ones that I've looked at, the ones that I was really interested in is Powell from Vista Shares. I haven't initiated a position on this, to be honest. Let's see if I can pull it up real fast. So this is just one. I'm sure there's probably like 50 other ETFs out there. This is just the one that I've probably, come across and more or less going to bet my money on. And Powell has had a great run this year. Let me see if I can pull it up here. Let's see, ETF chart. There we go. And yeah, Power has had a great run so far. Just year to date, 51%. Okay, for the last year, 52%. Of course, these aren't going to run like AI tech stocks. But I mean, even so, I would be pretty happy with a 50% gain year to date. I mean, it's beaten out the index and the Qs by a large margin. So, something to consider, something to think about. And Skeptic says, you streaming in two places at once? Yes, I'm streaming on the new channel, which is this channel. And I'm streaming on my old channel, which a majority of you are on at the moment. And of course, I'm streaming on X. So just as a reminder, eventually at some point, I will be moving away from the old channel as far as the live streams and only be live streaming on this channel. Just because that old channel is more so going to be towards like high yield portfolio type of stuff. I'm going to get back and create more like actual content for that channel. I just haven't decided what I want to do for it. And again, as much as I like high yield, there's other channels out there that do an amazing job. Me personally, comparing two ETFs to each other every other week just kind of loses its pizzazz. Like I can't keep comparing ETFs to each other. I start to go crazy. But I mean, not only that, there's a lot of new ETFs coming out, like the auto-callable single stock tickers, a couple from Granite Shares that are coming out. I mean, those are looking interesting. You have auto-callable ETFs coming out of everywhere. Like every other fund manager at this point is focusing on them. You have a lot of thematic income ETFs coming out, which I think is really cool. You have the K-MEM from Curve. You also have from X funds, you had Weapon, you had Nukes. And you're having DRMY, DRMY coming out. These are all, income-based funds on a thematic play, which I think is really, really cool because we haven't really seen like thematic income ETFs, but now they're starting to come out. I mean, you had Chippy, of course, everyone knows Chippy. Yeah, Chippy, Semi, and Soxy. Those have came out. Those, at least Chippy's, probably the fan favorite at the moment. So I think there's a lot of interesting things happening in the high yield space. I think we've moved past on the cover call ETFs, NAV erosion and all that other stuff. I think we've moved on past that. And at least in my opinion, investors, they want the appreciation, if not modest appreciation, with a decent yield, right? So a lot of interesting things in there. But again, not that I hate, but I don't like to talk about things that I'm not doing or that I'm not investing in, right? That's why I don't cover 90% of the things that are out there. But anyways, let's see. Dang, is this message old? This has to be old. Sergey, are you back or did you leave and come back? Anyways, so going back to the whole data center stuff, again, a lot of data centers planned to be built out, currently under construction. We will see how this plays out, but the underlying theme is there's scarce amounts of power. Not everyone has a lot of power. This also plays onto the nuclear story, or uranium, small modular reactors. In my opinion, and where I'm betting my money is on small modular reactors becoming kind of the next piece in all of this, right? Because now you have to solve for energy. You kind of solve for semiconductors. We know memories in demand. memory will eventually kind of plateau. There will be, less, or there'll be the supply will meet demand. So that's already kind of been solved. Then you start looking at under the other layers. You have photonics, you have lights, you have optics. All that stuff is starting to play as well. That's part of the semiconductor, part of the data center build outs. Copper, the energy to power copper is way more than what it takes to power like fiber optics, right? Then you run into signal transmission. So fiber optic cable is obviously important. That's why Corning or GWL had such a nice run. So you're seeing all these other names start to become important. And then we also have Nvidia attending going to Taiwan on June 2nd. I forget what that conference is called. There is something in Taiwan that is happening. So I think we're going to see a lot of names in Taiwan start to go crazy. So Nvidia's, let's see, is focused on a Computex technology fair and is accompanying GTC Taipei event. So yes, there is a Taiwan event coming up. And I think there's probably going to be a slew of names in Taiwan that are going to make deals with probably Nvidia that are going to be announced from this. So if you want to front run that, try to look for some of those names. I don't have any names in the top of my mind. I was looking at a couple of different Taiwan ETFs. Most of them are heavy towards semi and some, optics, some photonics, some, some of the supply chain. But it's kind of hard to front run that. You'd have to look at the individual names and see where they're involved in the supply line and or the supply chain. There is that ETF also. What is it called? NV, not Navitas. NVIT, I think. No. Anyways, there's an Nvidia ETF coming out in the future. I don't know if it dropped yet, but Nvidia ETF coming out in the near future. We covered it on only ETFs, and that ETF is geared towards the Nvidia supply chain. So it's going to include the photonics level, or photonics level as well. It's going to include probably TSMC. It's probably going to include ASML. It's going to include all the lithography, everything else. But that ETF looked interesting. It basically talks about everything that goes into building a single NVIDIA, chip, all of the other companies that are involved. So that would be a very interesting ETF to come out. Let's see. We have Butter Knife saying, I am here too, alive and breathing. Excellent. Sean Lively says, Sean says, POW 75% expense ratio, or 75 basis points for that ETF. Yes, which is true. But yeah, I mean, the biggest focus is the electrification infrastructure, right? And these are companies that should be direct beneficiaries from all those data centers coming online. So again, it's just an idea, all right? Not you don't have to go out and buy it, but just an idea. Some people are looking at the utility companies. We saw NextEra end up consolidating or buying out another company. Let's see. I think, who did they just buy? Dominion Energy. Yes. So NextEra Energy just acquired Dominion Energy in a $67 billion all stock transaction. So again, you have companies like that. You have Duke Energy as well. That's been making a lot of moves. So let's see what else we got. Thoughts on RVI? Thank you. So Aaron, I don't think I've seen you posted here, so welcome. So RVI, I've been really happy with RVI. I think I'm up. Let's see. I'm up, but let's see. I bought in right before the OpenAI announcement, so I'm up about 115%. I saw this thing run up to 200, which is insane. Like, it was absolutely insane. If you, let's see, there's other ETF. It depends what you want exposure to, right? So for RVI, Let's pull it up on the screen here. So for RVI, the biggest competitor they have is VCX, is like Fundrise VCX. Fundrise is VCX. They have what we want, what most people want. They have Anduril, they have OpenAI, Anthropic, and SpaceX already in that ETF. There's also XOVR. There's also GSXY, I think, or something like that. That's also out there. I chose Robinhood Ventures because I'm already bullish on Robinhood. So I already trust Robinhood to make the right decisions. So RVI, they're a little different from VCX in that regard. Like I trust Fundrise as well. I used to invest in Fundrise, like the actual real estate, investment trust that they run. Really, you're betting on the management. You're betting on the management that they're going to make good picks, that they're not going to, invest in companies that are going to explode in your face, like something like a FTX type of event. This does not have the exposure to SpaceX or Anthropic that VCX already has, or even Anduril. But I would suspect that Anthropic's $30 billion raise that they're raising for right now, that Robinhood Ventures is going to try and get a piece of that. I don't think they're going to get anything from SpaceX, honestly, not at this time, because SpaceX is not that far off from going public. So very likely that they're just not going to get it, but who knows? I don't know. A question I do have that I haven't researched into at all is what happens when these companies go public. So for example, like I like Stripe, right? Stripe is in the fund. Stripe is a payments gateway that a lot of different websites, a lot of different companies use. You probably use Stripe and you don't even know it. But Stripe is a pretty big player in the space. A lot of investors were hoping that they would IPO. That just has not materialized. But Robinhood holds it. You get that exposure, assuming the Stripe, shares go up in value, very valuable company, yada, yada, yada. Then, Robinhood should do very well. Robinhood Ventures should do very well. So my opinion is I'm investing in it. Full disclosure. I like it. I like the management. I trust in the management to make the right decisions, to find, the companies that are going to basically make me money, right? That they're not going to invest in like some hosh posh, garbage private company that's just going to blow up in their face, right? And they have a couple other ones in here. They have data blocks. Is it data? Yeah, they have data blocks and couple other ones. Let me see if I could just find the actual list for you right now. So, I mean, those are kind of just my surface level thoughts on RVI. Is this going to be a long-term hold for me? I don't know. I mean, it's run up quite a bit. If I was to ever get back to 200%, I don't know. I would probably think about cashing out at that point. Or I might hold. I have no idea. But you have Databricks in here, Revolut, Merkur, Airwallex, Boom Supersonic. Most of these companies I never even heard. I don't even know what they do. But you have Aura and Ramp. OpenAI is coming up, 11 Labs and Stripe. I mean, those are the names I was looking at. Databricks is more of a big data. What is it? Like big data. I want to say not collect. That's not the right word. Anyways, they do a lot of big data. So Databricks is a data and AI company which offers a unified analytics platform for processing and analyzing large-scale data to enterprises. So that's them. So hope that answered that question. Hope at least you've got at least a little bit of insight. If I were you, I would look at the president of this fund, like who's actually running the fund, because it's not Vlad. Vlad, CEO of Robinhood. It's not Vlad. It's actually a different lady. And she did a couple interviews, and I mean, I like RVI. I'm bullish on RVI. Let's see. James Mack says, all this news is blowing my mind. I invest in what I know. Tech stuff has been completely foreign to me. Yeah, I mean, honestly, the reason why I like doing these streams is because it keeps me sharp, and it's part of my kind of daily ritual anyways to go through this stuff. I'm pretty much in it like all day. Like it's pretty sickening how much how much news I go through. So I figured, why not just share this as a live stream and just go through it, right? Like just why not just bring everybody along for the ones that care? And then you also learn why things happen, right? When the market goes down, you learn why, right? Or why it sells off. One of the biggest things from last year, and I'm sure a lot of you guys know, people were like, why is like Misty going down, right? The infamous or famous, cover call ETF from YieldMax. People were like, why is Misty going down, right? Well, it's because MSTR is going down. Okay, well, why is MSTR going down? Well, and then you find out why, right? Bitcoin's going down. And then you just go down the rabbit hole. But, more so for tech, people like, for me, I would be clueless about why is tech going up? Why is, memory so important? Why is Nvidia running? Why is ASML running? Why is all these other companies, all these other tech names running? And just going through the news cycle just lets me know what's going on. It gives me some signal, right? A lot of it's noise, but it does give me some signal. And it allows me to build out my portfolio, like my themes, the theses that I want to back, right? So like one of the big ones right now is the debasement trade. I made a whole video about the debasement trade. And the debasement trade is the US government not being responsible, probably will never, ever be responsible with, money, and just going to print their way out of a recession, print their way out of, fiscal issues, monetary issues. So what is that bullish for? Well, that's bullish for gold and Bitcoin. All right. I mean, I learned that basically through just watching the news all of the time. And then it starts to make more and more sense why the debasement trade is real and why the US dollar is devaluing at an insane rate. I go on and on about that stuff. I'm sure you guys have heard it enough, but this is why assets, why investors, they're going to be the winners of this debasement trade, whether in equities, gold, or Bitcoin, or any type of real assets. This is why investors will be the winners. And people who aren't investing, unfortunately, they can't even, they're living paycheck to paycheck. Meanwhile, their dollars are going to waste, through tax revenues, et cetera. They will ultimately probably be the losers, unfortunately. And it's sad. It is sad to at least say that out loud, but it is a real thing. But anyways, I went on a tangent there, but I appreciate the comment. And yeah, there's always a lot of news in the tech space. Let's see what we have. Yeah, definitely. So link is it down below in the description if you want to join the Discord. And again, it's no paywall, nothing to sell. It's just a bunch of investors that shoot the breeze and just talk finance all the time, right? So a lot of good stuff in there. Let's see what else we have. Yeah, you want to get OpenAI and SpaceX. Man, that SpaceX lockup period is starting to look a little spicy because now they're talking about changing it for the lockup period for the LPs, the people in SpaceX prior, and even OpenAI. I wonder what their prospectus is going to say, but they're talking about allowing the lockup periods to end on a rolling basis for SpaceX. So Tom Lee was talking about it, and a couple other analysts were talking about this, that as those LPs exit SpaceX and retail jumps in, basically uses exit liquidity, as those LPs start to jump out, all of that money is going to get reused, right? So now you have like billions of dollars that are in these companies that will eventually get used for other things. Either the people who invested are going to start new businesses, invest in businesses, invest in the stock market, go out and buy things, whatever. So all of that money is, again, just waiting to be used and deployed. So it's kind of like the stock market's always going to go up. Let's see. So Aaron says, I appreciate it regarding RVI. Also wondering what happens once it goes public. Well, let's ask Gemini what happens. All right, let's see. Okay, if RVI or VCX holds a company and it goes public, what happens in the fund? Let's see what Google tells us. So when a private company held by a fund like RVI or VCX goes public, the fund's internal valuation shifts from a private appraisal to a publicly traded price, triggering a standard 6-month IPO lockup period during which the fund cannot sell those shares. So I guess that they will hold those shares and it'll just be at the whims of the market, of the open market. So we'll probably see fluctuations and then eventually settle at a price because, you know, the market is oh so efficient. So that's what will happen. That is actually kind of interesting. So I guess they could dump them. Following the IPO, the fund typically faces a 180-day lockup, meaning it cannot cash out or rebalance out of any of those public shares right away. And I'm not sure when VCX or RVI actually rebalances, if they rebalance, because VCX operates as a RIC, regulated investment company, is required by law to distribute 98% of its net realized capital gains to shareholders by the end of the year to avoid tax penalties. Oh, that's lovely. Just pass those savings on to you. So that's what happens. Sean says, I'm getting rich because of AI tech. Just buy SMH on every dip. Nice. Yeah, that's the other one I was thinking about was DXYZ. I don't know about DXYZ. I don't know enough about it. Nanalyze, someone had posted in here that Nanalyze, the channel Nanalyze, if you guys don't know him. But anyways, he posted that he was not a fan of XOVR or of DXYZ. We covered DXYZ on the last stream, I think. At least covered it briefly. Yeah, the Destiny Tech 100 ETF, and it has a bunch of private companies in here. It also has Beast Industries. I just want to point that out because I'm a BMNR bag holder, shareholder, whatever you want to call it. And BMNR does have an investment in Beast Industries. But I don't recognize a lot of these names, but it has Shield AI, which has been in the news recently for winning a drone contract with the Department of War. Never heard of Open Evidence. OpenAI, we all know these top three. Revolut's up in there. See, I don't know what Astranis is, Monzo. Like, we all know who Kraken is. We know Stripe. Let's see what else. Discord. A lot of people are waiting on that to IPO. Klarna, pay now or buy now, pay later. On a Chipotle burrito. I think it's the joke. Public is, I think, a brokerage account, and then Plaid is basically a gateway, so you can connect like Snowball Analytics to like your Robinhood. And I don't know who these other ones are. Bolt Financial, yeah. So I don't know. I can't say whether it's good or bad. You guys can look at the chart, and the chart was kind of wild. It had some really crazy swings. Yeah, the thing with these closed-end funds is you got to be real careful. It sounds sexy to invest in private, right? It sounds really sexy to invest in private companies, but not every private company is a good company. Not every private company is gonna do well. A lot of private companies fail, right? So just, yeah, you got to keep that in mind. This is why you got to look through the actual holdings and see what it is holding. But there is some safety in this because it has, let's see, that's 18, 32, so like almost 40% to, or at least 45% to the top three. So half of it is in some really large names. So at least there's a little safety there. And then you have all these other ones, which I don't even know who most of these are. Shield AI, I would probably I would include Shield AI. I mean, they've been doing pretty well. So OpenAI, SpaceX, Anthropic. So at least you get a little safety there. Let's see. I lost sound. It's on my end. I know that. Okay. I'm hoping, man, like sometimes I'll be talking and the mute button's clicked. Let's see. Sean says DXYZ. I'll have to look it up. And then Desert Yinzer says VCX will come back to Earth in September when the lockup is over. See, that's a good point. That's a really good point. When these lockup periods are over, what are the funds going to do? Because, I mean, RVI could, RVI, VCX, they could just start dumping all this stuff and then looking for the next big fund, right? So that's going to be interesting. What happens when these companies eventually go public? But you could also probably see some really wild swings in these two holdings, or at least three or four, whichever poison you choose, right? RVI, VCX, XOVR, DXYZ, right? You could probably see some wild swings if they're stuck in the lockup period. Aaron says, I'd like to see Ripple Labs in one of these. Get a little crypto up in here. Why not? And then there was some news, at least for those following the Ethereum trade. The Ethereum Foundation, Vitalik, actually posted a pretty long tweet over the weekend talking about, because there's a lot of hoopla, FUD, whatever you want to call it out there against Ethereum, saying a lot of the engineers are leaving, a lot of the top people are leaving. But Vitalik had posted that the goal of the Ethereum Foundation at this point is to go smaller, right? Is to basically minimize its footprint and focus on some core values that they have. They call it the crops. But a lot of people were wondering why so many people are leaving Ethereum Foundation. What's happening over there. And Vitalik's post basically said that Ethereum Foundation shouldn't be as large as it is. It shouldn't be driving Ethereum by itself. It basically wants to minimize and come down to basically just being a simple node, a contributor to the Ethereum chain. So a lot of people had mixed feelings about this. I think it's a good signal, at least a good sign, for Ethereum itself, and that it's not going to be, controlled by one entity, because that's the whole point, is that it's not influenced by one entity. It's influenced by the market, by all the nodes, all the operators, all the contributors. Ethereum also had some big moves or some big news drop. Let me see if I can pull it up real quick. Let's see. Where is it? Yeah, so there was, here it is. So for people who are following the Ethereum trade, this is extremely huge signal right here. So return to mainnet, says token terminal. Transaction fees on Ethereum L1 are at all-time lows, while transaction activity is at all-time highs. All right, so you see an inverse relationship here. So people are like, oh, why is Ethereum doing so bad and blah blah blah? Why is the price down? Yada yada yada. This is Ethereum's goal, is to entice businesses, entice the street, entice institutions to move onto the blockchain by offering lower fees. This is pretty much the strategy that they're using. And the way they will make this up is by the more adoption that comes to Ethereum, right? The more adoption that comes to Ethereum, the more volume, the more transactions that come to Ethereum, eventually, they will make that up on the fees, right? They'll make that up from high volume. And eventually that should influence the price of Ethereum in the future. So this is, again, a long-term play, a long-term trade. But I thought this was extremely interesting to have this data. Let's see. We have Chi Hang up in the chat. Hey, good morning from Malaysia. DXYZ has an expense ratio of 4.5%. No bueno. I'm glad you looked at that, because I didn't even look at that. I never even looked at that. That is crazy. Let's see. Where is it? It's probably at the top. Annual management fee of 2.5%. It's probably listed in the prospectus somewhere. That is crazy. 4.5%. That's wild. Yeah, it's probably listed in the prospectus what it actually is. Quick shout out to the 57 viewers on X. Appreciate you guys joining me for this stream, and to the 49 viewers on YouTube, 50 viewers on YouTube. Thank you guys for joining me. All right. So just as a reminder, I'm broadcasting in 2 different channels. So that's why probably if you're broadcasting from this channel, it looks like there's less viewers on your side. But anyways, beside that point, let's check in on futures, see how we're doing. All right, 58. So a little bit of a pullback. Let's see what oil's doing. All right, so still below 100. That's always good. So let's look at that prospectus. Where is it? Oh, okay. Yeah, it's 2.5%, unless the prospectus lists something else. Okay, what's going on here? Fees and expenses. Nope, you're right. You're right. There it is right there. Yeah, that's a very hefty expense ratio. That is a very, very hefty expense ratio. So yeah, is it worth paying that much for exposure to that stuff? Let's see. Sean Suman says, what's your opinion on Adobe stock? I don't cover Adobe, to be honest with you. So I can't really opine on that. I know they've been under a lot of heat recently. You had Nvidia that was, trying to help them out too. Didn't really do anything. They're lumped in with the SaaS apocalypse. I mean, they're getting cooked with all the other software names. See, I always point to IGV because it's the easiest kind of like weather gauge that we can use. But I mean, you guys see that. I mean, year to date, still down about 8.4% from its all-time highs. It's still down 20%. Again, the biggest fear with Adobe and Salesforce and ServiceNow, and I mean, what else they got in there? Hell, you can even throw some of the cybersecurity names in there. CrowdStrike, is that Anthropic is going to come into the mix and completely take away all their moats. That is the biggest fear, right? That's why we're seeing the SaaS apocalypse take place and why software is just selling off. You had news somewhere around here where, or it was probably right around here, where Anthropic has released Mythos, and it's the most powerful thing. It's going to, change, cybersecurity around. It can find vulnerabilities, zero-day exploitations, all that stuff, right? Yeah, it probably had the best marketing of any freaking AI out there. Now you have world governments worried about it. You had Scott Bessent, Secretary of Treasury, reach out to a lot of the banking industry and say, hey, what's the impact? We got to get on a call and figure this out, how bad Mythos can impact people. Because once they release that, if they release it, they will. Once they release it, I mean, you could have hackers running AI agents, running Mythos, right? Doing a bunch of whatever type of attacks on networks, on softwares, on everything. So that was kind of one of the points of why software was selling out, why Adobe was also lumped in there. And then you have people who are vibe coding, creating apps out of thin air, just out of their own thoughts, right? So what do you need Adobe for? Or Adobe Premiere, Adobe, Photoshop and all that other stuff when AI could just do it for you, right? So that's also not helping out Adobe as well. And that was also part of the thesis of why these software names are selling off, is because their moats are under threat. They're under threat from names like Anthropic and AI. So those are my thoughts on Adobe anyways. So we actually have Sean saying, I've been buying Adobe and we'll keep buying as it goes down. Let's check out Adobe. So why does it do this? Let's see. Oh, the joys of living overseas. Okay, well, what's Adobe's ticker? Is it ADB? Okay, well, now I'm in Europe. Now I'm in Europe. All right, so anyways, year to date down 26%. 41% over the last year, and over the last 5 years, 48%. I mean, I don't know, man. That's a tall order. You got to have some real conviction for this one. This could be a turnaround story. I mean, we saw it with Intel. I just don't know what they could turn around. I mean, software has dominated pretty much the last decade, and now you have the threat of AI coming in and people just developing better. That's also part of the thesis, is that smaller teams with the use of AI can produce better products in the future, right? JP Morgan has 30,000 employees. Jane Street makes almost as much money with 1/100th of the employee base, Jane Street. And then you're looking underneath that, Tether, which has 100 employees, makes almost as much as some big banks, right? I'm not saying that's part of the AI trade or the thesis against Adobe, but the idea that smaller teams, more productive, using or leveraging AI, the thought is a lot of these software names could be under attack from that. So now they have to figure out ways to maintain their moats, and they're probably going to start utilizing way more AI than anything, because that's just the way it is. So Sean Suman says, yeah, it's a 2 to 3x in a year or two if they continue to grow at 10% a year. Sergio says, I'm actually bullish in Adobe at the right price. The same goes for any SaaS player like ServiceNow or Salesforce. So he is long Adobe, long ServiceNow, and long CRM. The funny thing is there's no turnaround needed. They're growing 10% each quarter, and the forward PE ratio is 10.2. They just need to continue growing their AI era at 8 to 10%. There we go. I mean, like I said, I am not bullish on Adobe. I think we all use Adobe PDFs and everything else. And I mean, they have a really rich ecosystem of products. I don't think AI is going to, essentially derail them, as far as their products. I mean, they're what, Adobe Premiere, their video editing software is some of the best in the industry, is the best in the industry. I don't think you can vibe code Adobe Premiere, right? But who's to say like some small player comes out of left field and completely derails them and takes some of that market share? Again, all this is left to be is completely unknown. I'm still waiting to buy more. The problem with Adobe is that it doesn't really require a data storage, even though it is cloud-based software like Photoshop. Software is going to incorporate AI. Yeah, a lot of names are going to start incorporating AI. ServiceNow, I think is underrated, and I'll kind of just explain my thoughts on this, because I've actually used the software in the past, and I saw how powerful the software actually is. So this is a complete. I don't want to say it's not just a CRM, like a customer relationship manager. But it does ticketing, it does everything, it does workflow management. You get amazing dashboards, so you can see kind of the heartbeat of your company, especially if it's in the realm of IT. And it has a lot of plugins. You can get live data on your hardware. You can get live data on a ton of things. It has a ton of connections. So like imagine let's take a computer at a data center, right? If something was to meet a threshold, let's say it overheats, right? ServiceNow, if plugged into the management, can actually generate a ticket, right? And that ticket will automatically flow to like an IT team. And that IT team will be able to triage it to the correct section, whether it's, let's say it's servers, or let's say it's HVAC, right? So there's all these like workflows that go into ServiceNow that make it really, really powerful. It's not just a ticketing system. There's other companies out there like ConnectWise. There's also an atrocious one that's still out there. I can't remember the name. It's called Remedy. The Remedy ticketing system, absolute garbage. But ConnectWise, is also similar to that. But ServiceNow, what makes them super cool and super useful is that everything is easy to use, very user friendly. The dashboards are amazing. Creating a ticket is simple. And you can look at it through like your web console. You don't need like a whole other software. You can actually load it up on like a browser. There's a lot of cool things with ServiceNow. I think this name probably has a lot more to run. It's just getting lumped in again with the software names. The SaaS apocalypse down 50% over the last year. But having used the software, I could see why the rage is all there. Plus the contracts. You have to think the contracts for ServiceNow. Once it's there, once it's in, it's extremely sticky. It's hard to get out. You got to think like from a company perspective, either the CIO, chief information officer, or whoever, the CTO, chief technology officer, whoever's backing this. The whole point of having this ticketing software is to quiet the noise and to improve efficiencies and streamline workflows and things like that. You got to imagine like if once they implement this, if the CTO is happy, the users are happy, their problems are getting solved, and then from an IT perspective, they're able to manage better or have a better pulse on the organization. And why would you get rid of ServiceNow? The contracts, again, once an organization implements something like a ServiceNow, it's hard to just get out of it. because the users are already used to ServiceNow. They're used to the workflows. They're used to how to use it. And then, 1 year contract is over, and like the CTO is not going to be saying, hey, let's just move on to the next one. Let's try this other one. When they spent like 2 or 3 months onboarding ServiceNow, right? For their clients, for their customers, for the employees, everybody else. So I can see how there's a base around ServiceNow, how people are how they like ServiceNow. And I could see ServiceNow. I don't know if they implemented any type of AI at this moment, because I haven't used the software in probably a year and change. But I would not be surprised if they probably have some type of AI now, or working on an AI that's going to, probably help more so the decision makers or something like that. So really interesting stuff there. Unless AI is replacing full designers now, Adobe will be fine. There we go. Coming from Skeptic. Sean Suman says that it's a generational buying opportunity at this price to free cash flow. Buying now, and we'll keep buying on the way down. I'm a value hunter. Let's see. We have from G Nation. The big problem is that most of the designers currently use Gemini Nano Banana instead of Photoshop. Rodstamon, that's why the stock market is a new wealth builder. Always was a wealth builder. Real estate, as much as I love real estate, these last couple of years have been absolutely brutal for the real estate sector. Yeah, I don't know too much about Workday. Never used them or Docu. I know these names. I just never actually looked at them. Gonna put in the chat, because we're pretty much at an hour and 15 minutes. If anyone wants to come onto the stream and talk their book, talk their game, talk about anything we discussed on the stream, or bring up whatever they want to talk about, it is available in the chat. Just ask that everyone keep it PG-13. Let's see what else we got. Let's see if we have any breaking news. If this will load for me. Come on, internet. All right, let's see what else we got. Hyperliquid. If you guys are following Hyperliquid crypto coin, that one has been making some big moves. We don't have any updates. We don't have any updates regarding the Strait of Hormuz yet. There's so much yes, kind of crazy how much information keeps coming out from that area, and you don't even know what's real anymore or what's factual, because you have the president saying one thing, then you have Iranian government officials saying another. It's like, who do you believe? But we both know that the stock market is climbing, oil is coming down, right? And the 10-year bond is also coming down. So market's believing one person, but we've been close to a deal for weeks now. Let's see what else we got. Okay, let's see. Bitcoin is at 77,000 now. That's good. Oh, it dropped below. It dropped below. We were at 77,000. Pang thoughts. That came up. I have not looked into Pang, but that has come up. I just haven't really taken a look at it. I know recently someone was added to their board. Yeah. We covered that at the beginning of the stream. But that happened, and then supposedly Iran came out and said, hey, we're not going to be a part of the negotiations any longer. The deal is dead. But again, who knows if that's even real? Well, let's take a look. Yeah, this was about an hour and change now. This was self-defense strikes. No, I wouldn't think we're gonna go red. And the reason why I don't think so is so the story behind this is that a couple of Iranian boats were placing mines, but over the weekend there was news that the Iranians were going to start removing mines. I don't know if wires got crossed and that meant lay the mines or not, but the United States saw that and conducted a strike against these small boats for placing mines. And then they struck a couple of missile sites as well. So again, we're waiting probably to hear from the Iranian side what's going to happen and if negotiations are actually off the table. Because if it is, then yeah, we're definitely going to be heading lower. Again, I think, I hate to say it this way, but it's true. I think Iran has a lot of the leverage at this moment, keeping that straight close because they know that this is impacting the world and everyone's going to be pissed off at the United States for this. But there was also news a little bit before this that they were talking about including Iran in the Abraham Accords, which is actually a really, really massive deal. I had to do a little bit of research into the Abraham Accords because I don't know every little piece of geopolitics at the top of my head. But basically, the reason why Abraham Accords is such a big deal is because a lot of the Gulf nations, some of the Middle East nations, are in the Abraham Accords, and it allows for international trade. Basically, it's a boost to their economy and tourism and all this stuff, right? So you have countries like the United Arab Emirates that's a part of it, Israel. I think Jordan is also there, Bahrain. Don't quote me on those actual names, but including Iran in this would basically help normalize kind of the Middle East and open up trade across all these different countries. So Iran would benefit from this, but not sure between now and when the market opens. So maybe we get a deal or something. Yes, Padre, i.e. Victor, has posted paying in the chat a couple of times in the Discord, and he says bullish. Yeah, he posted. He was the one who brought us or brought it up. Who brought up paying in the Discord. His name is Victor. You can find him in the Discord. If you guys want to join, links down below. Shameless plug. Shameless plug. But yeah, it's in a link in the description. All right, ladies and gentlemen, I think that's going to do it for me. Been streaming for about an hour, invest and chill session. So far, we're looking A-OK for the stock market. Hopefully we can keep it and it not blow up in our face. So outside of that, I hope you guys had an excellent weekend. All right, at least a nice weekend. And we're going to be opening up hopefully green tomorrow, and hopefully we climb higher. And I see we have Dividend Sith joining us, execute order 66, DRAM, NASA, and UFO. We will be covering NASA and UFO on the Only ETF channel in the future. Me and Skeptic will be covering a couple of different space names. I did not realize how big NASA, not the entity, but the government agency, but not the ETF NASA. I did not realize how big that ETF is and how much investor demand is going into it, and some of the names. Chippy to 100, says Dividend Sith. That is a tall order. That is a tall order. But anyways, ladies and gentlemen, I appreciate you guys joining me for this stream. I'm going to call it here. Get on with my day. You guys have a wonderful rest of your evening, a wonderful rest of the day, wherever you are in the world. And I will see you guys tomorrow. All right, you guys take care.